always, this time for tuning in to my 2,953rd edition of Short-Term Trading Live with Oscar Carboni. Boy, oh boy, markets are starting to whip around. We got some great stuff to talk about, but remember there's risks involved in trading. Risky, risky, risky. Put your stops in, put them in first. We don't lose a lot, but on Monday we got slammed. Well, bam, we got stopped out, but luckily our stop was in because the market just kept going. Now, we've done well since, but Monday was a bad day. Stops save us on bad days. Make sure you put your stops in so they'll save you on a bad trading day. What's going on out there? Well, let me say, traders, these are late summer markets we're experiencing. They are thin, they're erratic. One day looks like, oh no, the market's broke. What happened? A mechanism in the economy broke. And then the next day, you go, oh wow, this looks like the beginning of the next big up bull move. And then the next day it looks different. That's summer trading. Don't let this get to you. It's thin. Markets will whip around. You seen what happened today? They were down all day. Towards the end of the day, turns around, whips all the way back up. Welcome to the summer. It's just late summer trading. We don't get nearly as many fills as we'd like. We don't get nearly as many profit objectives as we'd like. But that's what trading in the summer's always been like. There's this thing, by the way. It's an old adage. It's called sell in May and walk away. Now, I started in the business in 1982. I promise you that sell in May and walk away was absolutely the thing to do, and that's what everyone did. The trading desks would go, the bigger traders would take their vacation, they would sell the market in May, you'd have a horrible summer, they'd come back in September and the market would swing right back up. That used to work constantly. 2008-9 came around and sell in May and walk away I don't know about that anymore, right? So now what we get is you don't know what the summer's going to bring. Some summers, we've literally seen summers be the best market all year, and some summers we haven't since 2008. But what I can say is this. Summer is usually very complacent. The markets don't go too far. We have gone up thousands of points in the S&P this summer so far. You might not have recognized it, but in April, we were in the 4,200s in the S&P, right? Was that the number we got down to? No, we got down to the 4,800s in the S&P, and we're in the 62, 6,400s. It's been summer. You know what I'm saying? So if the market during what should be a complacent time has worked itself up and is hanging around as it works itself up, what do you think is going to happen when we all come back in September? This is going to be strong. So don't let these markets scare you. Don't let them deter you. Don't listen to the nonsense out there. Markets have been going great for a while. We've had a couple of down days, and suddenly that's it. It's the end. You know what I mean? Remember, it's summer. There is a thing about sell in May and walk away. Don't forget that. And once we come out of the summer, if we're still having trouble by October, we've got an issue, right? I wouldn't worry about it. Traders, let's look at what's on the board. The Omni for trading tomorrow is actually offering basically a neutral signal in E-mini, S&P, NASDAQ, Russ. Omni's neutral, doesn't want me to get long or short, which is kind of would make sense. If you've been watching the last couple of days, it looked really, really bullish, then it looks really, really bearish, and now the Omni says, whoa, why don't you go find some other places to play? And that's what we will do. We'll find some other arenas to play in. T-bonds and crude oil, they are moving in very constructive direction to help the E-mini, S&P, NASDAQ, and Russell end up having a good end of year. Silver and gold are bullish, number 3 on the board. And then we always clap Bitcoin, Bitcoin, Bitcoin. We love Bitcoin. So good charts on silver and gold, great chart on Bitcoin. T-bonds and oil all moving in constructive directions, and if they keep that up, these guys have to go higher, even the S&P, NASDAQ, Russ, but maybe not tomorrow. Tomorrow I've got a neutral Omni. I can trade some other markets. We'll see where that's going to go. So, would you like to see some of those charts? I know I want to go look at them. I always love to look at charts. So we'll do that in just a moment. A reminder about OmniCamp. It's coming to Australia.
My name's Chris John Higdon, and I'm from San Francisco, California. We're here at OmniCamp in Las Vegas with Oscar Carboni and a couple other gentlemen. Just came here mainly because I wanted my trading to be refined and defined, and I think I got the discipline and everything I need to be successful with Oscar.
If you are in Australia, you've got to let me know that you want to come out to one of my Omni camps, because if enough of you don't let me know, we're going to Europe. But the likelihood is Australia, because I've got a lot of fans in Australia, so I'm sure we'll be heading out there. Australians, fill out your Omni camp applications now. I haven't chosen a date. It is this year. It's in the next couple of months. Might be sooner than you think. As soon as I hear from enough of you, I will choose a date, and out to Australia the Omni will go. So, fill out those applications at omnibootcamp.com. Fill them out now. Let me know you're from Australia. Let me know, yes, Oscar, I want to attend your camp. I'm coming to you. You can't miss it. Fill out those applications, Australians. To everyone else, say this mantra to yourselves whenever you're trading. You know, it's one thing when you're in a good trade and everything's going in the right direction. You don't have to say anything to yourselves. You high-five yourself in the mirror. You tell your girlfriend or boyfriend or wife or husband how good you are. It's easy when you're winning, right? When we're losing, that's when all the bad stuff happens. We start canceling stops and moving them lower. We start making phone calls and panicking. You pull up the charts and you redo your analysis paralysis. Don't do any of that. Stop. What we do is we plan a trade, and we trade that plan with the stop in first. And then if the market starts going after our stop, we do something like this. We say, stop, soar, in. Emotions are that's what we say. Now you do the same, and when you're in a bad trade, it'll help you, I promise. Now let's go look at some charts. Traders, I heard a lot of hemming and hawing today in my live trading room, watching the TV, listening to the news, so I'm only going to give you one chart of the U.S. indices, meaning S&P, NASDAQ, Russell, and that will be the NASDAQ, and it's a weekly chart. It's called Chart Masterpiece. You've seen this for several years. There is not a single thing that I'm looking at in this chart that would get me nervous at this point. So yes, on a daily chart, markets do not go straight up, nor do they on a weekly chart, but the structure of this chart at this moment in time does not look scary to me. We know how the world works, and any time, it could be we can see next week and we have a bar like that and the next one like that and the world changes, but that's not what we have at the moment, right? For now, we're deep inside of this channel. We're all the way up here. We just made new highs, all-time new highs last week. The Fed is getting ready to lower rates. You know what that means, right? I've never seen a market in my life go down when they lower rates. Not once, not ever. They lower rates, markets go up. So we're going to lower rates soon as well. I wouldn't be running for the exits if I was holding NASDAQ, S&P, or Russell stocks, that's for sure. Next. 30-year T-bonds, they are starting to go in the right direction. This is a weekly chart, so every one of these bars is 5 days of trading. That's been going up, and it's getting ready to test this, and if it tests and gets above that, which doesn't happen usually, we might get all the way to here, and that would actually lower the rates for us a little bit, and it would help. What you're looking at here literally is the spread between the 4.25% that the Fed lends to banks and what banks charge us. This bond market sort of dictates what banks charge us. Right now, if you got the slightest ding on your credit, you're getting 8 to 9%. They're borrowing at a 4. That's ridiculous, right? So if the bond market goes up more, that spread gets tighter. They can sell it to us for less money, but banks are in control of that bond spread, and I'll bet they're not going to let it run up too far, but it is starting to run up. That is constructive. Let's look at the next chart. Crude oil. If bonds are running up, it means interest rates are starting to go down a little. And if crude oil is going down, it means the expense to run your company is getting cheaper. Crude oil moving down is an instant stimulus in everyone's pocket across this world that's got anything to do with moving product or themselves, unless they're 100% on the electric grid only. Crude moving down helps just about everybody in this world and the stock market too. So crude, this is another, look at this chart. It's been around for quite some time. It's a long-term weekly chart. This chart allowed me to give out two targets, 55 and then 47.5. When we hit here, I gave out both of those targets. We've already hit 55.12. That has taken place. The next one is 47.5. This is a huge pennant. You see that, right? and it is sort of a descending wedge, which means it should drop to the downside, and that is what's happening right now, helping the stock market, helping the world. If crude goes lower, that is a stimulus for the world, so economically that does help. Now we've got gold, traders. Anyone that's ever been to one of my Omni camps way back a couple of years ago when this formation used to take place more, you'll recognize this. Here you have a huge pennant, right? And if you've ever been out to one of my camps back a few years ago, we used to get pennants like crazy, so I figured out a good way for us to use them. And I showed my Omniacs that if you break it down into 4 equal quadrants, what you'll notice is right around the 80 to 85% mark, you will get a false breakout. Whatever that is the opposite of what's going to happen, and when it gets to the proper side, it'll go above, and look what it did. It did a false breakout at about 80 to 85%, right in here, perfect timing, and went right back up, and the bar on Thursday is there, right there. Gold is looking smart. Check this out. Look at silver. Check out this silver chart. This is insanity on a weekly. This has really been starting to move up, but now look inside this channel. And we just went up, came back to the bottom of the channel on Thursday, and I've got a green Omni for trading on Friday. Hi-ho, silver is all I can say about that one. Silver's looking pretty good to me. And then you've got Bitcoin. Traders, when we were up here, I mentioned that we were about to have some kind of a little pullback because Bitcoin follows the stock market. Stock market came down for a few days, as did Bitcoin. I promised that you should buy it at every level on the way down, and that I would, and I promise you I did. I bought it at every level on the way down. I think I just missed right here. I tried to get 111 and changes. I couldn't get them, you know what I mean? 112s, they wouldn't let me in there. But I bought everything else I could, so I did what I said I would do. Why? Because look at this. It's a flagpole. And this, of course, you see it's all marked off. This is a big flag. And if the stock market is getting ready to go higher because they're going to lower rates, that big flag is going to pay off to the upside, and the 126 target is going to be seen. Bitcoin's looking great. Nothing goes straight up, but Omni would buy the dips in Bitcoin just as it would like to buy dips in gold and silver. Traders, I hope that helps. Make sure you join me at livewithoscar.com.